Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra with me, Ishal Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the stock markets are still hovering about 80 points higher in trade as far as the Nifty is concerned, 24,935 odd level for the Nifty. The Nifty Bank, however, has turned flattish in trade right now with just about a 20-point downtick, 51,483 right now for the Nifty bank index as well. But most of the sectors are still hovering higher in trade with a whole host of stocks that are buzzing in trade, including stocks like Asian Paints, ITC, consumption-oriented stocks. We're also looking at stocks from the metal pack like JSW Steel also inching sharply higher. Even the insurance names like HDFC and SBI Life, they've also ticked higher in trade. But we'll see whether the momentum really sustains from here on within the entire FMCG, IT, pharma space that's come back into fore in trade today, or is it going to be again a second round of sectoral rotation again? Good afternoon, Shell.
Good afternoon, ladies and gentlemen. The Nifty is caught in a sideways band, no more than 100 points trading range today, the low being 24,860 and the high of course being 24,960. The reason is very simple. Today evening at 11:30 p.m. The US Federal Reserve comes out with its statement on its hopes for the interest rate movement on Wall Street in the coming quarters, and of course at 12 midnight you'll have the US Fed chair Mr. Powell making a speech. So before that, the entire global equity space is range bound. There is risk off trade in equities, and there is very little work happening in terms of strong movements on either side. On the markets, you have the Bank Nifty expiry. The index is doing nothing, 51,511, just 18 points higher. The Nifty 500 in fact is the best performing broader index, 0.35% higher, and you have a mild green tick on the IT index. If you look at volumes, there is absolutely nothing to talk about. In terms of most active counters, HDFC Bank has 2,400 crores worth of transactions changed. It's only the earnings-led news that is boosting stock prices. Torrent Power, for a change, is the top traded counter on the NSE. Needless to say, a record high, 16% higher, 1865, and about 2,583 crores worth of transactions have happened. Ditto Dixon Technologies, ditto Gas Authority, all of them up on a very strong footing as far as the first quarter earnings were concerned. These numbers came in late evening yesterday, and the markets have appreciated at least these three. In terms of top gainers on the NSE, apart from Torrent Pharma, you have the entire pharma pack. Ajanta Pharma is 6.5% higher at 2,700 rupees. Suven Pharma is 6.5% higher at 1,005, and you have a whole host of brokerages and the Bombay Stock Exchange that are doing extremely well, despite a very negative consultative white paper that has been floated by the regulator to curb derivative spending, derivative trading, and thereby impacting future volumes, future profit and future profitability on a lot of brokerages, but nothing as far as prices are concerned. In terms of record highs, you have counters such as Trent 5847, 4% higher, MCX 4298, 2.5% higher, NTPC 2.5% higher, and of course the two insurance twins, ICICI General Insurance and ICICI Pru Life, up about 1.9% each. Sakshi.
Yes, let's welcome our guest on the show now. We have Mr. G. Chokalingam joining in, the founder and the MD of Economics Research is now joining in. Warm welcome to you, sir, and thank you so much for taking the time out. Do tell us, what are you making of the trend in the market right now? 3 days and 25,000 mark has been remaining elusive from our sight just by a few points. But is the trend still intact? What are the markets really waiting to hear to climb above that level, and why is this resistance coming in?
Despite overall market cap hitting $5.6 trillion, I still believe the momentum can continue in Sensex and Nifty stocks. As I've been saying, there's a lot of valuation comfort even now in Sensex and Nifty, as they are trading at around 24.5 PE on trailing earning basis. and they also severely underperformed small and mid cap stocks for last 4 5 years. I think the time has come for these large cap stocks to do well. So therefore, I would still stick to that target that Sensex could hit 90,000 by end of current calendar year. However, we are seeing though the small and mid cap indices levels are quite strong, there are many small and mid cap stocks are correcting. First time last 1 week we are seeing that small cap stocks, half of them or one third of them every day they are declining. So this is an indicator that the profit booking is silently happening without damaging much the overall market. So this is also a cue to learn. So one should be very cautious on overvalued stock, but stay in quality stock in small cap also, but keep rising your exposure to large cap stocks.
Good afternoon, Mr. Chokalingam, and a very warm welcome to you, sir. On a daily basis, in the month of June and July, markets have risen dramatically, almost 10 percentage points over the last 8 weeks. Sir, what do you make of this rally, and what do you look at in terms of valuations now? Anything that catches your fancy at current levels, sir, on the long side?
Yeah, thank you for inviting me. It's mainly because of a massive structural boom. BSE took nearly 145 years to get a 4.5 crore investor base. Last 12 months alone, BSE got 4 crores 60 lakh new investors. So unbelievable, Today we have more than 18.5 crore investors. Out of that, 12-13 crore have come only in the last 3-4 years. So they are driving the market. More liquidity is coming. Of course, one should give importance to the economic factor also. That definitely the investment and economic growth are giving a lot of confidence. The budget also, I have mentioned that the fiscal prudence is, the focus has been really excellent. First time in the recent history, I saw, the targets are more than achieved. Either you take a fiscal deficit or borrowing, or you take a revenue deficit. Very rare phenomenon. So that also gives an indication that there is a possibility of rating upgrade for Indian economy by the international agencies. So the long-term outlook looks fantastic with the growth. And also another interesting fact is that monsoon, at the end of June, the monsoon was a big failure. And today it has become surplus. So all are converging. But then, as I've been saying, as market goes up, the market cap also gone up. But then liquidity doesn't go up by same proportion in the country. The liquidity available in the stock market. So therefore, one should be very cautious. So the simple rule of thumb, if you are giving 50 PE, see that in small cap, mid cap, the profit grows at least by 25%. If it is far below 25%, but the stock trades at 50 PE, then book the profit and put it in the bank deposit or large cap. So if somebody follows this strategy of tilting towards large cap and not compromising fully on valuation of small cap and mid cap the way I was explained, I think this is amazing market to create wealth for next 1 to 3 years.
It's a great thought, Mr. Chokalingam. 1 to 3 years, the markets can continue to create great wealth. Let's come down to specifics. Where exactly do you think one can focus on to create this wealth? What are the kind of stocks and sectors that you would pick out for the next 1 to 3 years where the outperformance can come in from, sir?
Certainly. Before that, because a lot of people follow me and fully invest only in small cap. Out of that fear, I would say that before going to small cap, large cap stocks like, Reliance Industry, ITC, HDFC Bank, Dr. Reddy Lab, these are the large cap stocks. Coal India, recently we have initiated, single digit P. So you park 30 to 50% of your money in the large cap stocks. A balance for wealth creation. Definitely, I can add a few stocks. We have a Albert David. Small cap, liquidity is of concern. It's a fabulous stock. The single digit PE pharma company, and the enterprise value to sales is just around 1 time. So many pharmaceutical companies are trading at 3 to even 6 times enterprise value to sales. It's around 1 time. Plus the free cash is about 45% of the total market cap. The second stock where I also invested is a Balmalari company. It has come out with the results recently. It's a decent result. Fabulous company, more than 150-year-old company, lot of real estate assets, particularly a lot of logistic infrastructure assets, very rich assets. and 8.5 rupee dividend, come dividend. And it also got into travel and vacation business, which is doing fabulously well. And it has got a industrial packaging company in UAE, where it has got 49% stake. And every 3 years, that is now doubling the profit. So this is another stock for wealth creation. Karnataka Bank, where we have also invested, I believe that in next 2-3 years, it can create a solid wealth. This is the only old private sector bank having a face value of 10. This is more than 100 years. It survived successfully 100 years, despite being a private bank. So I have a lot of confidence because the management survived, and in the last 1.5 years, they have brought in a lot of technology heads, different business vertical heads from the reputed banks and financial institutions. And not only that, if you see the shareholding pattern also, around 22% of the shares are held by HNIs, very ultra HNIs, and institutional holding has become 47%, which used to be very low for this bank. And most importantly, Karnataka Bank trades at nearly 10% discount to adjusted book value. This is the only bank, and it has got the business size of 1.75 lakh crore. Fabulous business, and available at around 7,000-8,000 crore market cap. So I just can't believe it. And most important, after the technological glitches the big banks have seen, if you see in the last 1 month, all the big banks are focusing on now, the branches. They understand the importance of the branches. That is where Karnataka Bank scores. It has set up branches over the last 1 century, and a very credible, durable, huge network. And that could attract many investors to invest in the bank. So this is a third bank. And then Axelia Solutions, it is owned by the world's largest private equity fund and trades only around a 20-21 PE, whereas comparable MNC small IT stocks like Mindtech, Explio, they trade at even 30-40 PE, whereas this is trading at around 20-21 PE. The most attractive point is that it is held by the private equity companies, and in our Indian experience is that wherever the private equity companies have held the stocks, they created a lot more wealth, and then they shifted the ownership to somebody else. So, and most importantly, the company is focused heavily on aviation industry, and that is where a lot of optimism is there now. So these are my stocks for medium to long term, and I am pretty confident about these stocks.
Yes, these are trading at modest valuations. Axelia Solutions was earlier known as Kale Consultants. This was a Pune-based software developer for airlines business. I remember a time, Mr. Chokalingam, that the company was going through a very bad phase when that World Trade Tower collapsed in 2001. The IPO was, of course, in I think 96, 97. But it's been a storied asset from then on. Mr. Chokalingam, how do you see this increase in capital gains tax on long-term shareholdings, as also the removal of indexation benefits for the real estate space, harming the broader sentiment on Dalal Street?
Yeah. So before going to the tax, I just wanted to say that you are absolutely right on Axelia. So I mean, really, impressed by your memory. Post that, what has happened? The ownership of Axelia changed hands thrice. Before the present owner, two more owners came and took over the company, and incidentally, all three owners are private equity funds. So the moment it changed the ownership from the Indian promoters to the present, third private equity firm worldwide, the biggest firm, the market cap gone up by more than tenfold. So that is one of the reasons to pick up the stock. As these private equity firms take over and create a value and sell it off. So in the process, the public shareholder also got benefit out of the the exponential growth in the market cap. So coming to the capital gain tax, yes, it was a shock because we are also investors personally. So it was a shock. But then, there are two things. One, the long-term capital gain tax is 12.5%. So this budget has widened the gap between short-term and long-term. Earlier it was 5%, now it is 7.5%. So therefore, there is an incentive for investors who, not traders, but for investors to convert slowly all their long-term investment with the investment horizon of 1 year. So that that is a good advantage out of this widening gap. And secondly, though the 20% short-term capital gain tax is a little, burdensome for middle class people, but where are other opportunities? Your bank deposit is only 7% return, and that also you have to pay, your 33% tax if you are in that bracket. So here India, the small cap and mid caps have created a phenomenal wealth, and they would continue to create a phenomenal wealth provided you don't compromise on the fundamental valuation. So even after paying 20% tax, I think there is a room for creating a substantial net wealth. So that is why the market also nicely accepted. In fact, I am also one of the persons to get scared post budget, thinking that the market may crash a couple of thousand points on Sensex, but market has accepted, and again every week 8 to 10 lakh new investors are still coming in. So I think it's going to be a phenomenal story, but ups and downs will be there. There will be a punishment for the wrong stocks. But if you are taking up the right stock and the right asset allocation within the equity asset class, I think this is a beautiful market to stay and create wealth. The penetration should increase. People should come forward to invest in the equities.
Absolutely, that's a wonderful take, Mr. Chokalingam. I also wanted to just take a very quick comment on the way the market regulator has now tightened the vigil on the entire F&O space. If you could just help our wider audiences and viewers understand, if the regulator continues to tighten the noose here, and if it does not stop at these 7 propositions that the consultation paper has highlighted, and it goes much more beyond, how is it likely to, alter the market texture, if at all, maybe impact the retail investors at large and the market volumes that everybody is really cautioned about, and even for broking houses which are existing in the market space? Does it impact their revenues, turnover? How are you assessing the entire situation, sir?
Definitely. I mean, it's a very interesting question. I love to answer it. I am, not trying to please the regulator, but honestly speaking, the SEBI has done a great job. I mean, repeatedly expressing the concern about the middle class. Even in the morning, I saw the media report that as per SEBI, 60,000 crore is the, loss made by Indian households. It's a fabulous, research. Earlier also they have done saying that 98% of the people lose money in F&O. It is very, very important because as a student of economics, I can tell you that in the last 40 years, I have not seen the way now people are shifting from fixed deposit to stock market. So therefore, these measures are very, very important. And in fact, but I thought I went wrong. I thought budget would do a lot more measure, but then except the STT hike, not much has been done. But now I'm happy that the regulator has taken up. It should be done. You know why? As an analyst for more than 3 decades, I can tell you, even I don't have any capability to predict, intraday movements or intra-week or intra-month movements because they don't depend on fundamentals at all. It's a sheer demand and supply of the shares on the market, irrespective of the fundamentals. There are many stocks which come out with the very, very bad results, but stock goes up. Companies come out with the fantastic results and stock go down. So what has happened? I have interacted with hundreds of retail investors in the last 5 years. A lot of middle class investors who are new to the stock market, they think that they have the enough skill to make money, and they want to convert intraday trading as their profession and try to make monthly income from that. But then 9 out of 10 end up losing a lot of parents' money. I have seen personally a farmer's son losing money and farmer selling his land and compensating. So these are our great measures, and SEBI should not bother about the fall in the revenue for the brokers. They should go ahead and punish these kind, or rather discourage these kind of investments. Only the serious investors should come to F&O. So therefore substantially they should hike the minimum trading lot, so that only the serious investors who can do hedging their portfolio can depend on F&O, or professional investors can. But otherwise all these entry level investors should be filtered out from this. So therefore I welcome it, and I hope serious measures are taken.
Right. Mr. Chokalingam, I think you will make a very welcome guest in the North Block in New Delhi. You have praised everything that the FM has done and SEBI has done, and you will make a lot of new enemies in the market. and perhaps lose older friends.
Thank you. Any question?
Well, no such thing is going to happen. And yes, no, I was just pulling your leg, sir. And whatever you say is absolutely right. The movement in options and futures has very little to do with the fundamentals of the market, and they are purely meant on demand and supply, as also on the kind of liquidity that you can pump on one particular side, therefore resulting in losses to a vast majority. Let us see what comes out of that consultative papers. But Mr. Chokalingam, the market is saluting you, sir. Days high on the Nifty, 100 points higher, 24,956, 960. Let's hope we have a nice record close today. And with that, one large cap, if you can name, in your conversation you mentioned that about 50 to 60% of current portfolio or new portfolio should be in large caps because of their relative valuation comfort with mids and smalls. Maybe one or two names that you can share?
Yes, certainly. I already shared the big Coal India. You know what has happened, even now it is trading at single digit PE. Interestingly, worldwide, even the commodity stocks valuation got vertically shifted. The commodity stocks now trade at even 20-25 PE, whereas Coal India is still around 9-10 PE and 5% dividend yield. By any chance market crashes and you lose notionally much in Coal India, still you can wait for a couple of years and enjoy 5% dividend yield. Not only that, as I mentioned, Coal India, there are two major triggers. One is that recently they got a graphite mining license, and the management says they will go get into in a serious way non-coal based minerals like graphite and other lithium related minerals even outside India. So this can help Coal India to get further vertically shift its valuation multiple from 9-10 to even 12-14. And second trigger is that there was a press release saying that Coal India plans to list two of its subsidiaries engaged in coking coal and research services. And these two businesses get very good P multiple on the market. So therefore, any move happens, I'm not forecasting that, but if any move happens, that also will be big positive. And second, I'm extremely bullish on Dr. Reddy. I may be wrong, but I don't own, but I have been extremely bullish because it makes 10,000 crore of net foreign exchange earning, net after FE outgo, and it's a very big sum. 10,000 crore when the rupee is at an all-time low, and 96% of the revenues are from generics. And if rupee falls or market falls, the rupee will fall, and that will be positive for this company. And the generic, according to many experts, the opportunities are growing in a very big way across the world, particularly in the US market. And third, Dr. Reddy has done a lot of tie-up with many foreign companies for marketing their products. So, and plus 7,000 crore net cash company. So all this make me very attractive for Dr. Reddy.
Right, we'll focus on Maruti for a bit. The earnings are out and it's a stellar show as far as the profit is concerned at 3,650 crores for the first quarter. It's substantially higher than the estimate and way higher than the year ago number, which was 2,485 crores. You have revenue which has shot up to 35,500 crores for Maruti compared with 32,333 crores. Again, a beat on the estimate, and of course, EBITDA has shot up. Sakshi, if you look at the EBITDA number, it's 4,500 crores versus 2,983 crores, and margins are taking it away. 12.67% versus 9.23. Very quickly, Mr. Chokalingam, any view that you have on Maruti? The stock is running away 3.3% higher. This is a record high.
Yeah, we have a coverage, Maruti also. We have about 13,800 target. Result is really fabulous beyond expectation because in the quarter ending June, the volume sales growth was not impressive. Yes, SUV sales growth was extremely impressive, but that was taken away by a dip in the small cars. So overall volume growth was not very strong, double digit. Despite that, the result is very good, and we might relook at our valuation, and it's definitely hold maybe after looking at the number, we can see whether it is a buy.
Okay, got it. Well, thank you so much, Mr. Chokalingam, for being with us on this very special edition and sharing all your thoughts right there. Maruti Suzuki now 4% higher at just the closing minute of the trade today. That's the stock that we will continue to track first tomorrow morning, because it just got just a very few minutes time to react to its earnings. 13,375 record closing high for Maruti Suzuki. That's the stock that we will be watching out for even tomorrow, and how the entire auto space will be in focus. Remember, tomorrow again we will be getting the entire auto space sales figures as well. So the auto space is likely to be the first sector that we will check tomorrow too. 3:30 viewers, and the markets have managed to shut shop at the highest point of the day, 121 points higher for the Nifty, 24,978. That's the kind of surge that we've got. Of course, Maruti is one of the top movers that contributed to the gains on the Nifty today. ITC but contributed about 12 odd points. Kotak Mahindra Bank, Asian Paints, ICICI Bank, L&T, these were the other contributing factors. The Nifty Bank also sprung back into the green, about 0.25% higher in trade for the Nifty Bank. Remember, when we started off the show at 3, the Nifty Bank was in the red. So sharp move coming in on that front as well. And of course, across the board, we did see most of the sectors ending higher in trade, including banks, autos, financial services, FMCG, IT. Top gainers, of course, were metals, pharma, private banks also, rising in trade as well. We'll have to wrap it up at that. Many thanks from both Shell and me. But yes, it's a record closing high on the Nifty yet again for the third day in a row, and therefore we will be continuing to look at whether 25,000 mark is seen in tomorrow's trade or not. We'll continue to keep our fingers crossed for that one. But thank you so much for watching us and this special edition on Business Today Television of Market Today. Thank you so much.
We recently had, a regulation which we will be notifying fairly soon on this issue of influencers. And as you know, and as I've articulated, that we do not have jurisdiction over just anybody, right? I mean, the fact that it's called social media, at the most granular level, it starts with me advising my brother on something, right? It starts from